Welcome, friends and clients. I'm Patrick Murtha with Murtha and Murtha CPAs. I'm here with Kyle and Tom, my partner Tom, and Kyle, one of our CPAs, who are here to talk about some of the changes and some of the relief that's become available for the CARES Act. We're going to talk about some stuff for individuals, as well as stuff that has been released by the government and the SBA for businesses. So we're looking forward to sharing some good information, hopefully helping everybody get a better understanding of what's going on with the CARES Act. First, I'm going to pass it to Clem Harrod with Clemco, who is helping us with putting together this webinar. So he's kind of going to just discuss some of the rules and how we're going to kind of do things here. So Clem, I'll leave it to you.
Thank you for that, Patrick. Hello, everyone. My name is Clem Harrod with Clemco AV and Clemco HR. And so our mission is to help coach, lead, educate, and mentor independent contractors, small business owners, and other businesses as well to, project the best image possible and help with their long-term success. So this webinar is another example of some of the things that we do. From a logistical standpoint, we ask that everyone remain muted, that you also not share your video just to enhance the streaming quality for everyone. If you have questions, please direct them to the chat feature, and we will do our best to answer all of those questions at the very end. For your best viewing experience, we also suggest that you use the speaker view, and we will be sharing a presentation as well. If there are any concerns, please make sure that you just put them in the chat box as well, and I will do my best to take care of them from a technical standpoint. And back to you, Patrick.
Great, thank you, Clem, appreciate it. So again, we're going to talk today about some of the things that happened with the CARES Act that was released last Friday, exactly 1 week ago today. We're going to start off with a brief summary of the changes and some of the relief activities that the government is implementing for individuals. And Tom Murtha, CPA, my dad and my partner, is going to handle that for us. So Dad, go ahead and let's get started.
Fair enough, Patrick. Hi, my name is Tom Murtha, and I would like to welcome you to this very special presentation, Coronavirus Aid, Relief, and Economic Security Act. Explained. There are many parts of the CARE Act, as it's known, that apply to individuals. We're going to cover these now. Probably the most obvious one that everybody noticed right away is that the federal tax return deadline has been extended to July 15th, 2020. So this applies to also corporate tax returns, 1120s, and to estates and trusts, Form 1041. Applies to all 1040s. The extension is not just an extension to file, but it's also an extension to pay. So there'll be no penalties for failure to file or failure to pay as long as you file and pay by July 15th. This does not include certain businesses that were required to file on March 15th, such as S corporations and partnerships. If you're a client of ours and you haven't filed, you know that we've already done an extension and you've been extended until September 15th of 2020. Estimated payments are part of the plan here too. The first quarter estimated payments are due on July 15th. However, the second quarter payments are due on June 15th. So it's a little bit backwards, a little quirk of the act here where you'll be paying your second quarter estimated payments before your first. If you don't feel like you're going to be able to make that July 15th filing deadline, we can file an extension. You can file an extension on your personal return until October 15th, 2020. Moving on to stimulus payments. This is probably one of the most obvious parts of the act that a lot of people have asked about. Stimulus payments. Here's how it works. Let's move that slide. Each taxpayer will receive up to $1,200. A married couple will get $2,400. There's an additional $500 to each qualified child under 17. So the way it works is If you are a married couple filing jointly and have 2 children under 17, you'll get $1,200 per adult and $500 per child, a total of $3,400. The payments do phase out at $7,500 for an individual and $150 for a couple. So what happens is after the $150 for a couple, the phase out is $5 per each 100 of income above the 150,000. So to look at the broad end of it here, it totally phases out at $99,000 income for singles and $198,000 for married couples. Now the eligibility is based on, for the payment right now, is going to be based on your tax return for 2018 or 2019, whichever is the most recently filed. What happens is when you file your 2020 return, your eligibility will be tested again. And this is really where the base of the testing is. So when you file 2020, if you did not qualify in 18 and 19 and therefore didn't get your stimulus payment, you will get your stimulus payment when you file your 2020 return. It'll be in the form of a tax credit and it's a refundable tax credit. If you have already gotten the stimulus payment in 18 and 19, but you really don't qualify in 2020, it doesn't matter. You get to keep it. There's no penalty. For those who are on Social Security and don't file tax returns or haven't filed in a while, it's not really a problem because they're going to be automatically sending payments to Social Security recipients who haven't filed. So there's no need to file a return. When can we get the payments? Well, we can expect the payments for people who have bank accounts that have filed tax returns showing the IRS that they have bank accounts by mid-April. After that, they will start issuing paper checks in May. So they're going to be sending about 5 million a week out starting, I think, May 3rd. Okay, so the other thing is the payments are not taxable. Now, what if I owe the IRS money for a prior tax year and I've been paying them on an installment sale or I owe money? Doesn't matter. They're not going to reduce your stimulus payment by this amount. However, if you do owe child support, they will be taking that out of the payment and forwarding it to wherever you want. Other individual relief involves retirement funds. So the new law actually waives a 10% penalty for early distributions of up to $100,000. Now, this is retroactive to January 1st, 2020. So any early distributions will not be charged the 10% penalty. However, the distributions will be taxable. So they'll be taxed as ordinary income, but that can be spread over 3 years. So you can pay part each year for 3 years, pay the whole thing at the end of 3 years. Alternatively, you can roll over that money into another plan, an IRA plan, within 3 years and not have to pay tax on it at all. 401k loans, previously to this law change, $50,000 could be borrowed from your 401k as long as it got paid back within 5 years. Now that's been increased to $100,000. A very big item on this thing is the individual relief is RMD rules, required minimum distributions from 401k plans and IRAs and 403b plans. Required minimum distributions are totally suspended for 2020. So therefore, you can leave the money in your 401k or your IRA and 403b, and it can continue to grow if that ends up happening. Anyway, a couple of other parts of the plan here that are not as well published is unemployment benefits. The Fed is going to be adding $600 to the weekly unemployment benefit for anybody that's claiming for 26 weeks. Now, Florida, the maximum Florida benefit is $275, and that will be added to the $600 total benefit of $875. Florida is also one state that has a very short period that the benefit lasts. It's only 12 weeks. A lot of states are 26 weeks. The Fed will continue to pay the $600 after the 12 weeks. They'll pay it for up to another 13 weeks. Another item is federal student loan payments. Starting on March 13th, federal student loan payments can be stopped, can be suspended, and they'll consider them as being paid. Missed payments will be applied as though they were paid. So it really amounts to a forgiveness of federal student loans for 6 months. And finally, charitable contributions. This is a small one, but they've added a little above the line contribution deduction of $300 for those who don't itemize their deductions. Thank you again for joining us with this presentation. Patrick will now explain some of the relief afforded to businesses in the form of the SBA's Economic Injury Disaster Loan Program.
Thanks, Dad. Appreciate it. So basically, what we're going to cover now, we're going to go into the business side of the relief. So I see a couple people have asked questions. We're gonna keep an eye on that in the chat. So take a look at the chat feature. If you have any questions about what Tom just covered on the stimulus checks, on some of the individual relief items that were discussed, you can mention those in the chat section here, and we can certainly address that at the end when we have Q&A. So now we're going to dive into the business-specific relief part, which is definitely a lot more complicated. There's a lot more kind of happening in real time right now. So Clem, if you can push to the next slide here, please. So I'm going to talk about the Economic Injury Disaster Loan. So this is actually an SBA loan product that's been around for a long time. It's actually been available almost every year, because almost every year there are federally declared disaster areas in the United States. So, historically, imagine Hurricane Irma, for instance. Certain businesses that were impacted may have been eligible to apply for a loan under the EIDL program. So obviously right now with COVID-19, with the pandemic happening, the entire 50 states of America and the territories have been determined to be federally declared disaster areas. So really just about any business who can arguably say that they're impacted by COVID-19, which is virtually everybody, is eligible for, potentially eligible for the EIDL program. So essentially the purpose of the EIDL is to provide working capital to businesses that are impacted by the disaster. And one thing that is very different from pretty much all other SBA loan products is that it's actually administered and underwritten directly by the Small Business Administration, whereas other other loan products are actually administered by a bank that have been given delegation authority through the SBA. So we'll see the PPP loan that Kyle's going to discuss after this is done that way. In order to be eligible, you have to be a small business, which the SBA defines as 500 or fewer employees. You must have been in business before January 31st, 2020, and you must be, as discussed, affected by the disaster and be in a federally declared disaster area. Clem, if you could go to the next slide for me, please. So some details about the loan that's available. It can be up to $2 million. An advance is available on the loan, which is actually rushed out within 3 days of the application. It appears virtually anybody who applies for the loan is eligible to apply for the loan, is eligible for this $10,000 advance. And from what we're understanding, it's basically a grant, meaning that you are not required to repay this advance if it's spent on payroll and other operating expenses and not personal expenses. So there probably will be some sort of process that you'll have to follow to prove that, hey, I spent this $10,000 on business expenses and not on non-business expenses. The rate is a fixed 3.75% for businesses, and for nonprofits who are also eligible, it's 2.75%. And the loan can be for a term of up to 30 years. That term is determined by the SBA, so you can't necessarily submit your application and say, hey, I need a $300,000 loan for 30 years. The SBA is going to look at the information that you submit and your ability to pay the loan and base the repayment on that on their own. The payments are deferred for up to 1 year, and interest does accrue during that year. So although you won't be making payments, there will be interest accruing at that time. Next slide, please. So some of the stipulations are that for the EIDL, it must be used for financial obligations and operating expenses that could not have been met had the disaster not occurred. The loan itself cannot be forgiven, which is important. You'll see when we discuss the next loan product that the SBA created, which is the Paycheck Protection Program. EIDL loans will require UCC liens on business assets, meaning that they will require collateral on the assets of your business if you get one of these loans. And they will also require personal guarantees on any loans that exceed $200,000. However, they will not request liens against the guarantor's real estate. So in other words, SBA loans, typically a typical 7A loan, which is a common type of loan, or a 504 loan, which is a real estate loan through the SBA. Generally, they would require collateral on the borrower's personal primary residences if they have equity and that kind of thing. That will not be required for EIDL loans. Next slide, please. So how do you apply? So as discussed early on, the EIDL loans are a program that's funded actually directly through the SBA. So you can apply for this loan through the website. It's covid19relief.sba.gov. It's an online application that you fill out. There is some limited financial information that you would need. So you would need to know what your gross sales were, your gross receipts were. For 2019, you'll also need to know potentially some of your expenses and what your cost of goods sold and gross margins were. Those are all things that your accountant can help you with potentially. And your 2019 tax returns officially do not need to be filed prior to applying for the EIDL. It's unclear right now for the PPP, which is why it's important to mention that. And I think that's it. Can we have the next slide? So now I'm going to pass it off to Kyle Fleischel, CPA, who works with us. He is, over the past week, has become, along with a few of us, an expert in the Paycheck Protection Program, which is changing rapidly if anybody's been looking into this. Please, again, if you joined late, take a look at the chat feature to ask any questions, and we'll address them at the end. And with that, I will pass it along to Kyle to discuss the Paycheck Protection Program.
All right, thank you, Patrick. So the Paycheck Protection Program was put into place to ensure that businesses with employees could continue paying those employees for the next 8 weeks. There are a few requirements. You must have at least 500 or fewer employees. It is available to 501c3 nonprofits, and sole proprietors, independent contractors, and self-employed individuals are also eligible for this loan. Right now, businesses can begin applying, but sole proprietors, independent contractors, and self-employed individuals are not going to be able to start applying until April 10th. Clem, you might hit the next slide for me. So the main purpose of the loan is to keep employees paid. We're in uncertain times, and the government has given this opportunity to employers to give their employees peace of mind knowing that they're going to continue getting a paycheck, and give the employers peace of mind knowing that they're going to be able to continue paying their employees. It provides employers with 2 months worth of salaries plus an extra 25% to pay certain overhead costs, meaning the loan amount is 2.5 times your average monthly payroll for the past 12 months. Clem, next slide, please. Awesome. So what is payroll? And the Act specifically describes payroll as gross wages in the form of salaries, commissions, and wages, tips to tipped employees, vacation, sick, parental, family, or medical leave, the employer cost of health benefits. So if you have a group policy through your business, you can deduct the employer's portion of health benefits that you pay. If you have a retirement plan through your company as well, you can add the retirement portion of benefits paid by your company to the payroll costs. And you can add state and local taxes. In Florida, that's going to be your reemployment or unemployment taxes that you file quarterly. And as I said earlier, this loan is eligible for forgiveness. If you use the loan proceeds in the next 8 weeks, or excuse me, in the following 8 weeks after you receive the loan, it is eligible to be forgiven. That doesn't mean 100% of it will be forgiven. There are some certain limitations and tests that you have to meet. But if it is spent on payroll costs, health benefits, interest on current mortgage payments, and other debts that were in existence prior to February 15th, rent, and utilities, there is a portion, if not all of the loan, that could be forgiven based on certain calculations that were published in the act that was passed last Friday. Next slide, Clem. There are a few things that employers are still going to be responsible for that they cannot get out of. The first is going to be the employer portion of payroll taxes. So that's going to figure that'll cost employers about 8% of what they pay their employees on payroll. So if in the next 8 weeks you think your business is going to have about $100,000 of payroll, you are still going to be responsible for roughly $8,000 of payroll taxes. I think any business owner would be happy to pay $8,000 if they knew the government was going to pay $100,000 of their salaries for the next 8 weeks. The loan is not interest-free. It is a 1% interest loan for up to 2 years. However, the payments can be deferred for 6 months. Again, if we're looking at a $100,000 loan and you hold that money for 3 months before it's forgiven, your total interest cost is going to be $250. Again, I think it's a pretty good deal to take the $250 interest payment to get $100,000 to make payroll for the next 8 weeks. And then not more than 25% of the loan can be used for non-payroll costs. Those are going to be your rent, your utilities, and your interest on mortgage and other debt obligations. So no more than 25% of the amount of money that you receive as a loan can be used to pay non-payroll costs. All right. The biggest question we're getting right now is, what can you be doing to prepare? So the first thing you'll want to get are financials and get them to your bank. You want to contact your bank immediately, and you want a list of what the bank is going to require. Most likely, they're going to require payroll documents. So if you have a payroll company that you use, contact that payroll company for payroll journals for all of 2019. And you're also going to need copies of W-2s, W-3, 941s, 940, and RT6s. And I know I threw a lot of alphanumeric combinations at you right there. Your payroll company knows what each one of these forms are. If you request them, they will be able to send them to you, or you will be able to pull reports through your payroll provider's online portal to get that information. Banks may also need additional information. They're still getting guidance from the SBA every day, and the SBA has told the banks that they're going to have to verify the amount of payroll. If you do use a payroll provider, some of them have started publishing a special report for COVID-19 that calculates your eligible amount of loan for you. So you may be able to contact your payroll provider or log into your payroll provider's website and get a special report that calculates your loan eligibility amount immediately for you. Next slide, please, Clem. So we just wanted to put together a quick little comparison between the PPP and the EIDL. Right now, businesses can start applying for the PPP. Self-employed independent contractors are going to have to wait until next week, April 10th, and before they can start applying. The EIDL loan is available right now. Businesses with under 500 employees can apply for both. Certain cooperatives can apply for the EIDL. Sole proprietors and independent contractors can apply for the PPP, as well as nonprofits and veterans organizations. For the PPP program, there are certain exceptions to the employee limit. If you are in the hotel or food services industry, then it is a 500 employee limit per location, not entity-wide. So the PPP program has a maximum loan amount of 2.5 times the average monthly payroll, up to $10 million. The EIDL's maximum is $2 million, and applicants can request $10,000 immediately in the form of a grant and not have to pay it back. The interest rates are slightly different. So the PPP is a 1% interest rate. It doesn't require any application fees, prepayment penalties, collateral, or personal guarantee, whereas the EIDL doesn't have any prepayment fees or upfront fees, but there could be potential liens on business assets and personal guarantees for loans larger than a certain amount. The repayment period, like we said, is 2 years for the PPP program and up to 30 years for the EIDL, pending SBA approval. Your payments are deferred for 6 months if you start the PPP program, and they are deferred for 1 year after your loan origination under the EIDL. Loan proceeds can be spent for employee wages, health insurance premiums, retirement benefits, and interest on debt, utilities, and rent for the PPP program. EIDL lets you use it for operating expenses that could have been met had the disaster not occurred. Like we mentioned, the PPP program is eligible for some forgiveness pending certain tests and limitations. The EIDL loan must be paid back. And tax returns for the PPP program are right now, from what we can tell, on a lender-by-lender basis. So contact your lender to see if they need a copy of the tax return. Right now, the EIDL does not require a tax return, but you will most likely need to sign a 4506T, which authorizes the SBA to pull a transcript of your tax return at a later date. And that's the summary of comparison between the PPP and the EIDL.
All right, thanks, Kyle, for the detailed summary on the PPP loan. Probably, like he said, it's changing rapidly. We're in contact with a lot of different lending partners that we work with in Noel, and it's just crazy, how quickly it's moving. I think one thing that's really interesting is everybody was saying, oh, you got to get in line on the 3rd of April to get your PPP loan in. And early this morning, almost every lender I know sent an email out to everybody saying, we're not going to be ready today. So you're not too late to miss the boat, even though today's the day, because most lenders aren't doing it. So anyway, without further ado, I will go through the questions here. So feel free to keep asking your questions. We have quite a few here. So I'm going to start with Mercedes Hale. Hey, Mercedes, thanks for joining us. Glad you're here. She asked, going back to the stimulus plan, the stimulus payments, what about dependents over 18? Tom, Dad, if you want to answer that, my understanding is if you are a dependent over 18, you are not eligible. Your parents are not eligible for the $500 credit, and dependents are not eligible for the $1,200 credit. Is that the case?
That's correct. As far as we can tell here, it's qualifying child, which is a child under 17. So you got it.
Yeah, and there's been some articles that I've read that kind of talk about, whenever these plans are rushed out like this to respond to an emergency situation, there's holes that happen, and sometimes they patch them and sometimes they don't. But right now, pretty much any adult dependent, meaning anybody over 17 or over who's a dependent of another, nobody's going to get a stimulus check for that person, whether it's their.
Well, let's look at the situation of somebody, a parent who is a dependent of the child and is only collecting Social Security. They'll be getting their own stimulus check.
Is that the case because of Social Security?
Right.
All right. So let's see what else we have. Do we know, Andrea Chen asked, if student loans forgiven, how much and how to apply for this? Do you have any information on that, Ben?
What the information we have is that 6 months of payments are actually waived, and the federal government will pretend as though those payments were actually made, and they'll come off. It's an effect and a forgiveness of 6 months of payments.
So
I don't believe the loan's going to be forgiven, but if you do log into your federal student loan account, you should be able to see that the interest rate has been updated to $0, and you are not required to make a payment on it for the next 6 months.
So probably, follow up with your loan servicer there to learn more about that in your specific case. Nancy asked, can a 1099 contractor who is unable to work during the pandemic and is also on Social Security apply for the extended federal unemployment benefits?
I would assume so. Sure. I mean, if somebody's working and can prove that they had earned income, I think they will qualify. In fact, one of the changes here is the states have been directed to allow self-employed who normally were not allowed to collect unemployment to jump on the boat there.
So what's the answer? Reach out to the unemployment office?
I would say to apply for your benefits.
Okay. Yes, Jeremy Stoker asked, Zoom says this is recording. Yes, we are recording this, and as soon as Clem chops it up and takes out all my mistakes, then we will be publishing it probably on YouTube or something, and we'll probably have it on our website and on Facebook, and I'm sure Clem will be distributing it as well. All All right. Cassandra Anderson says she applied weeks ago, I assume for the EIDL, and no word of the 10,000 there behind, FYI. Good insight, not surprised. So that's one thing to keep in mind is this is all, new for the history of the world here. So expecting everything to run ultra smoothly is definitely, probably not going to be the case. Deneen, hey Deneen, how you doing? Glad you're here. She asked specifically about the PPP loan. If a business owner has payroll and also takes draws, can these draws be included in the payroll average for purposes of determining the amount to multiply by 2.5? She's assuming no, but she wants to be wrong. Kyle, what do you have to say about that?
Well, unfortunately, the answer is no. They are going to require W-2s and W-3s, and it's very specific to payroll. Unfortunately, Deneen, you're referring to distributions, and those are not payroll.
All right. Tampa Fine Arts Academy asks, if you are a business who has independent contractors, will the PPP encompass payments to contractors?
That's a great question. And the SBA released the guidance on that last night and said no. The reason being that independent contractors are eligible to apply for the PPP loan themselves. So if the businesses who paid the independent contractors were allowed to include the amounts they paid them, essentially the government would be loaning $2 for the same dollar of payroll, both from the businesses that's paying the independent contractor and then the independent contractor reporting the income as well. So unfortunately, the answer is no. It is payroll only. I think when you hear commissions, they mean commissions paid on W-2, not necessarily on 1099 to independent contractors.
All right. Samantha asks, how do we know if we should lay off our staff compared to furlough or 0-hour schedule? I don't want them to be able to collect, I don't want them not to be able to collect unemployment to help pay their own bills. If we lay off our staff and they apply for unemployment and then we get PPP, do we then hire them back and now start using this PPP instead? I think the answer is yes, right?
The answer is yes. The SBA has come out and said, and Congress in the actual act said, if you had to lay off employees prior to this, and then you get the PPP program loan, you are allowed to hire those employees back, and it will not count against you if you had a reduction in employment for the purposes of calculating the loan forgiveness. So I would say absolutely, the second you are eligible and you have that PPP loan, hire every employee back at their rate of pay, because you've gotten a loan to cover 2.5 months of salary. And that's really the whole point of the loan, is to keep employees paid. I have had a couple people reach out to me and say, well, what if I no longer have the work to be able to pay the employee? And my answer has been, pay them anyway. The purpose of the loan is to keep employees paid and keep food on their tables. I have an example of a private school who has had to go to virtual learning right now. So the bus drivers have no children to pick up at bus stops because everybody's learning from home. Those bus drivers, even though they don't have a route to run, still need to get paid on this program because that's the purpose of the loan. So absolutely, yes, keep those employees paid, especially when you get that PPP loan.
All right. Joshua asks, can I use my PPP to pay myself or my S-Corp if I'm paid a management fee and not payroll? So in other words, he's, I assume, running a management fee through his Schedule C.
That's what it sounds like. Josh, if you've paid yourself previously on W-2, those are W-2 wages that you're eligible to submit to the bank for the loan to try to get the PPP loan. If you're paying yourself a management fee on 1099, then you will probably be considered self-employed or an independent contractor. I would probably make an argument that you want to be self-employed, because I think the banks are going to ask for 1099s if you're an independent contractor.
And then he would be one of those ones that are eligible to, they're saying on April 10th, right?
Yes, correct. Thank you, Patrick. Yes, you'd be eligible to apply on April 10th.
All right. Emmy, name sounds familiar. Are employer portion of the payroll taxes to be included when figuring the amount of payroll? I believe they are not. Is that correct, Kyle?
They are not. No, these are gross wages paid to employees only. These are not employer costs to pay those employees. i.e. payroll taxes. So the federal payroll taxes, Social Security and Medicare are still required to be paid by the employer and are not to be used in calculating the loan amount for a PPP.
Right. Latona asks, are commissions considered tips? I think if tips are on W-2, then they're included, right?
Yes, if your tips are reported on your W-2, I believe in box 9, then yes, those are tips that the employer can use when calculating their payroll amount. If they're not and you receive commissions, you would be considered an independent contractor or self-employed, and you would want to use your tax return to apply for the PPP loan when you're available or eligible to on April 10th.
Oh, Justine, another familiar name, asks, does an employer have to pay the same employees for loan forgiveness? I.e., if an employee is unable to work due to the virus, can wages be paid to someone different in the interim?
If you're paying the same employee, that's fine. Even if the employee is unable to work due to the virus, continue paying that employee. Again, that's the purpose of this loan. If you reduce an employee's payroll during the 8-week period, there could be consequences, meaning you will not get 100% of the loan forgiven. So even
and also, I mean, now another example would be, let's say you had an employee that stole from you, so you fired them and then replaced them. You would still be eligible for the full forgiveness if you replaced them with a new employee and substantially paid them the same amount, correct?
I haven't read or seen anything from the SBA about that yet. When the act was passed, right now we're kind of getting ahead of ourselves. We're talking about the loan forgiveness portion and not just the loan. When the act was passed, Congress gave the SBA 30 days to release guidance on actual loan forgiveness, and we're still waiting for that to come out. A reasonable person would say, yes, if a person is fired for just cause, then they would be excluded from any reduction in hours or payroll. Again, we're waiting for SBA guidance on that. They had 30 days from last Friday to release that guidance.
Got you. All right. Steve asks, my personal financial institution does not offer the payroll protection plan. Can I go through my personal bank? So Steve, I can comment on this. There's been a little bit of an issue in this regard. So certain banks and credit unions are not SBA lenders. And if the bank that you work with is not currently an SBA lender, then it's highly unlikely that they're currently participating in the PPP program. So the problem is most banks that are participating in the PPP program are only working with their customers that they currently have a relationship with. However, the SBA has been ordered basically by Congress to enable many more banks in the coming days here to be given delegated authority to underwrite these PPP loans. So,
hey Patrick,
yeah.
And the SBA came out last night and basically said any bank that's insured by the FDIC or any credit union that's federally insured has been whitelisted to participate in this program. I think they just have to submit paperwork that says they are.
There you go. So there's going to be a lot more banks in the coming days that are going to be participating. So unfortunately, the best case scenario is the bank that you know and trust is doing it for you and that you already have a relationship with. But we've had some clients of ours who've come to us and said, hey, I work with this bank or this credit union and they don't do the SBA lending currently. So I would just kind of sit tight and see if your bank is going to open that up. And if not, you're going to want to start looking for a bank that's taking on people that are not currently banking relationships. But a lot of the big banks, for instance, like Bank of America and Chase, are only taking on customers for the PPP loan if they were business account holders at the time of as of most of the time it's February 15th is the date that they're choosing. All right, Evelyn asks, does 1099 count as part of payroll for the company who paid the 1099 employee? I think we kind of already covered that, right, Kyle?
We did, and the answer, Evelyn, is no. Unfortunately, again, it allows for double dipping. The business can get a loan for paying that self-employed individual or independent contractor, and then the independent contractor can get a loan for that same dollar. So unfortunately, the answer is no. It's only W-2 wages, nothing paid on 1099.
All right, Bethany asks, hi Bethany. In 2019, I was a full-time employee at a firm while also owning my small business that also brought in a profit. Based on this, am I eligible to get the loan on my full-time employment from 2019 aside from the small business profit? My last day of that position was February 1st.
Bethany, it's a tough question. It's a good question. I'm not sure the company that paid you on W-2 would be the one getting the loan, and they would be the one continuing to pay you on W-2. If you owned a small business that also brought in profit, then you would be eligible to apply for your own PPP loan using that small business's income. So I would recommend going to a bank and applying for the PPP program loan using your small business income, and maybe reach out to your prior employer and ask them if they plan on hiring back people who were let go in the beginning of the year, at least for the 8 weeks that they are going to receive PPP loan funds.
Yeah, I agree. That's what I would say as well. Andrea asked, Bank of America just told me they would not provide my small business with the PPP loan because I've not had credit with them on my business before. Can I apply elsewhere? I'm an S Corp that's been in business for 6 years. So this is kind of like we were talking about, a lot of the bigger banks, they're only working with their clients that they've had on record at least before February 15th. So yes, you will be able to apply elsewhere. As of right now, it's unclear exactly who's participating and what banks are going to be picking up the slack there, but I'm confident that in the coming days and weeks, more banks are going to be opening up that are going to be taking care of people in your position who don't have a bank that's ready and able to help them. Go ahead.
Andrea, you're not alone. You're not the first person to run into this issue, particularly with Bank of America. We do want to encourage you to get everything together and try to apply to any lending institution that is willing to do business with you.
All right. Okay, so Justine Walker asks, if 100% of the PPP loan is used to pay for payroll and rent, utilities, et cetera, will the entire amount be forgiven? My understanding is, yes, it will be as long as it's spent in the first 8 weeks after the loan is received, and no more than 75% of it at least must be used for payroll, correct?
Yes, and there are some other tedious calculations in the bill, and we won't go through the rigorous math that it would take to calculate the exact amount. As of now, yes, that's how it works. We do plan on putting together some additional material once the SBA has released guidance on the loan forgiveness to help shed a little clarity on the actual forgiveness part, but that we're still waiting on the SBA there, Justine.
All right. So Bethany missed the beginning of the presentation. She wants to know, when does the stimulus package begin and where can we read or research further details or apply to, so we can apply or get in line. So Bethany, there's no application for the stimulus package. Basically, if you filed at least a 2018 tax return and your AGI, if you're married, is 150,000 and not more than 200,000, then you should apply. You should be eligible for a certain amount of stimulus. It will either come to you a direct deposit to your bank account if you have a bank account on record with the IRS because you've had refunds that were direct deposited in the past, or if you do not, they will mail you a check. They're expecting the checks to take longer, but the direct deposits are expected to begin in mid-April, I believe. Is that all correct, Dan?
That's correct. And if you don't have like, let's say you've owed the last 2 years, so you have never given the IRS an account number, and I had a case this week where somebody got their bank account hacked and had to close it. So he's like, how do I get my thing? Well, the IRS has said that they would open a portal where you could go in and put the correct bank account in. So we're still waiting to hear from that, but that's what they're promising to do. So
there's some development.
You might not have to wait until May to get your paper check. So
okay.
We're issuing more guidance on that as we get it.
All right. So Jessica, hey Jessica, how you doing? Glad you're here.
Hey Patrick, I think you missed a question from Robert real quick. If you jump up 2 comments.
Oh, did I?
Yeah. He
Oh,
asks if he was
okay, go ahead.
full-time. Yeah, sorry. Robert asks if he was full-time from January 1st to March 28th, and before that he was an S corp. Should he try for the PPP loan or unemployment? Robert, under your S corp, I believe you had to be in business on February 15th in order to qualify for the PPP loan. If your business was still open and you have eligible wages, go ahead and submit that to the SBA and to your bank to see if they'll deem you eligible for the loan. For the unemployment, hopefully your employer is also trying for this PPP loan. And at that point, they'll hire you back at least for the 8 weeks to keep you on payroll so that they can forgive the loan that they get and they can keep their employees paid, with the goal that at the end of the 8 weeks, all of our quarantines and safer and home orders have been lifted and we can start to get back to some semblance of business as usual. Unemployment, I think is your decision. If you wanted to try to start applying for that, that's your decision.
Yeah, reach out to the unemployment office. You probably are eligible.
Yes, good point. Yes.
All right. So Jessica asked, what about a dependent born in 2019? I have one dependent from 2018, but two dependents for 2019 taxes, which are not filed yet. So right now, since 2018 is what you have on record, your stimulus payment will be based on 2018. In 2019, assuming that you are still eligible in terms of AGI for the stimulus payment, however number of eligible child dependents you have will be counted in that as well. So essentially the difference between 2018 and what you should have gotten in 2020 will be paid out on your 2020 tax return if you don't have the 2019 tax return filed on time for the IRS to use that for the stimulus payment. Is that accurate, Tom?
Right. The 2020 is actually the base year that all this is going to be calculated on. So, if you got a payment in 18, based on 18 and 19, but you didn't really qualify in 20, they're going to let you keep it, no penalty. If you didn't get what you should have gotten in 18 or 19, when you file 20, if it shows that you should have added those two dependents, you'll get that extra $1,000 as a credit, or it's actually a refundable credit on the tax return.
Exactly.
It'll either reduce your tax or you'll get it back in a refund.
All right, so Michelle asks, my son is in college, turns 22,000 last year, 19 years old, not claimed as a dependent. Does he qualify for the 1,200? Yeah, as long as he has a tax return in 2018 or 2019, filing, claiming himself and not being claimed as a dependent, then he should absolutely get a stimulus check. All right, Sherry asks, is a sole owner of an LLC small business with employees considered a small business or self-employed?
I would say small business. If you're paying payroll, small business, start submitting that application to the bank right now.
Yes, and from my understanding, Kyle, you can still include. There's a way to calculate the self-employed part of.
There's a way to calculate your earnings.
Right, exactly, to be included in the PPP loan.
So what you're saying is that the total earnings would be the earnings of the C Corp plus the wages paid to outside people.
Yes.
Or to employees. Okay.
All right. Okay. Has anyone actually received the 10,000 yet? This is from Dave Banford. Those that I know haven't yet, wondering if there's a timeline or deadline to issue. I mean, all I know is the application states it's supposed to be funded within 3 days.
Yeah, and everything I've seen says that you have to request it. So maybe there's a special place on the
there is a request. You have to request it on the application. But assuming they did that and they're still not receiving it, that is a problem.
Jessica asks, if we do receive the 10,000 grant or up to a certain amount, what kind of documentation do you suggest we keep for what we are using the funds for, receipts, etc.? Absolutely. I recommend that you keep every receipt. And for the PPP program loan forgiveness, you're going to be required to show that you paid employees, that you paid utilities, that you paid rent, that you paid mortgage. So we're recommending everybody keep copies of bank statements with bank acknowledgement authorizations, copies of canceled checks once they clear, and receipts showing that they were paid for the PPP program. If you have a lease, get a copy of that lease agreement, get a copy of any loan statements showing the amount of interest paid. And if you use a payroll company, get a copy of all the payroll journals for the 8-week period once you receive that PPP loan. Patrick, are you aware of any other documentation that's needed for the EIDL loan?
As far as the EIDL, it seems to be pretty straightforward. I've kind of run through the application myself, and the only thing is they do ask some questions about your financials of your business. So they want to know your gross receipts and then your cost of goods sold. But other than that, it's pretty straightforward. And I think they do actually have a 4506T, which is a transcript request. But I think that's about it. It's a pretty basic application.
Now, as far as the EIDL goes, that 10,000 that they're giving is substantially a grant. And would they have to have any kind of proof what they used it for?
It's kind of unclear at this point because normally these EIDL loans don't have a grant. That's something that they added here because they wanted to get working capital in the hands of business owners quickly. So I've read some speculation and some opinion pieces that in order to, it'll be similar to the PPP loan where you might have to submit some kind of evidence that it'll be looser than the PPP loan because it just needs to be used in the business for business expenses. But there might be some kind of form in order to get that 10,000 forgiven where you have to show, hey, I spent this $10,000 on, payroll and rent and materials and that kind of thing. Rick Price had a question. Sole owner and sole employee of LLC, taxes and S Corp. Do I qualify for the PPP loan and the EIDL? Yes, you should. Depending how you pay yourself through the S Corp might impact the PPP loan and how that works for you. But you're definitely eligible to apply for the EIDL loan.
Yeah. And if you applied or received the EIDL loan, I believe prior to February 28th or 29th, you can actually wrap that into the PPP loan as well.
They'll basically refinance. They'll add it to the balance and refinance it. Yeah.
Yes.
Okay.
Michelle asks.
Yeah, go ahead.
Yep. Michelle asks, her husband applied for EIDL on March 31st. Did the streamline one. No deposit has occurred in his business account. Has anyone seen the payments yet? Well, Michelle, based on our little poll here, it sounds like no one's seen the payments yet. Unfortunately, I don't think we're going to have the answer for that. I would definitely encourage you to try to contact someone at the SBA who's familiar with these EIDL loans and see when to expect that $10,000 grant.
Robert asked, does the PPP loan forgiveness affect your credit? There's been nothing officially saying no, but I do not believe it will at all.
Yeah. I can't imagine it will.
Yeah, that would not be the point. Yeah, I would assume absolutely not on that. All right, Charlie Weber asked, the people that work for me were on 1099. I'm a business owner that pays myself on 1099. So the PPP, I would not be able to pay myself on payroll, nor the guys who work for me, correct? So kind of the same question we've had before a little bit. So your 1099 guys would be able to file their own PPP and you'd be eligible to file your own. Is that correct, Kyle?
Yes. You'd have to file each of your own under the independent contractor. It doesn't count as payroll to apply for the PPP loan using wages.
Somebody asked, it's an anonymous name, but when can an independent contractor apply for the payroll protection program, and what is the process? So those are allegedly April 10th. Again, everybody else has been April 3rd, and that's seemingly effectively delayed just because so few banks are participating, even though today's the official day. But currently, independent contractors are able to apply next Friday. And the process is you need to reach out to your bank. So primarily reach out to your bank that you have a relationship with. That would be the best course of action. And if your bank isn't able to work with you for whatever reason, then you would want to go ahead and try to find another lender, which, as we've discussed, the SBA is going to be delegating authority to just about any lender that wants it. Samantha clarifies regarding the laying off of employees question. But do we lay off our staff compared to furlough or a 0-hour schedule? Samantha, that's really maybe more of like an employment law question. I think as far as the PPP goes, if it's based on payroll that you're paying them. So the number of employees, and Kyle, maybe you want to take this.
No, I think you answered it correctly. It really is an employment law question for terms of the PPP loan. Once you get the loan, you bring those employees back on at their what you have been paying them historically, and it won't count against you when calculating the loan forgiveness. But a decision to lay off or furlough is not really a decision that I think we're qualified to make or give an answer on. It's an employment law or a business decision that the owner needs to make.
Right. So Andrea asked, so we have only one employee who works part-time who we pay in cash. Can the employer qualify for the PPP?
If there's W-2 and W-3 showing that you reported the payroll to them, and there are 940s and 941s and RT6s showing that payroll taxes were paid on it, then I don't see why you wouldn't be able to apply for the PPP program. If this is a cash under the table type of thing, you're going to have a very difficult time proving that as payroll, and I don't think you'd be eligible for that.
Yeah, it's pretty. They've really. It seems like the more guidance we get from the SBA, the more clear it is that it's based solely on payroll, on W-2 payroll.
Yes.
Evelyn asks, what loan do you recommend for a business that is in the build-out phase but has been affected? I mean, this is really it's really a subjective question. It's hard to say. I mean, you'll probably be eligible for a bigger loan based on the EIDL because most of your expenses are going to be based on hard costs like build out and buying equipment and buying inventory and that kind of thing, depending on the business. So you'll probably get a larger loan using the EIDL. And there is that $10,000 grant part of it that's beneficial. So probably the EIDL loan, but I would definitely say that's a hard question to answer without really looking at everything.
And I would say if you're in an initial build out phase, you probably don't have any payroll in the past 12 months, so you wouldn't qualify for a PPP loan anyway.
I think you got to look at the purpose of the loan too. If the purpose is to keep employees paid for a couple of months, then you're looking at the PPP. If it's to complete your startup and build out or whatever, you'd probably be looking at the EIDL.
Yeah, I would lean on the EIDL there. All right, Chris, why would forgiveness? No, we don't think it would. We talked about that, so we don't think forgiveness of the PPP loan will affect credit. Cindy says thank you for having this webinar. You're very welcome. Rick asks, also as a sole owner and sole employee LLC S corp, can I qualify for unemployment insurance here in Florida? I'm just trying to determine best option. I don't know. Reach out to the Florida reemployment folks.
Well, if you have W-2 employment, then yes, you have no problem. It's always been that way. But the law has changed. The feds have directed the states to pay self-employed individuals who normally didn't get that. So if you've got self-employment income to show, then I think you could probably still qualify for the unemployment. And the big thing in the unemployment is not just getting Florida unemployment, which is only $275 a week, but it kicks in that $600 from the feds.
Right, which is a little better than usual. So Deneen asks, can or should you apply for more than one bank? I think you want to just apply, find a bank that you're able to apply through that, I think a lot of people will be lucky to find more than one bank where they're able to even submit a loan right now. So just try to work through your own bank. And I don't think there's any need to apply through multiple banks. I think you just need to pick one and, pick a horse and go. It's not like a typical SBA loan, when you're doing a business acquisition or something, and you're kind of getting into a bidding war between banks. I mean, they're all going to offer the exact same terms. You just want to work with a bank that you're comfortable working with.
And on the application for this thing, you're signing that you're not going to get more than one of these loans. If you apply to two banks, what happens if they get funded on the same day and all of a sudden, you've just lied on a federal application because you said you weren't going to get two loans and now you got two loans. So I think it's safer to only apply at one bank.
Well, further than that, the decision to lend on the EIDL, it falls into the hands directly of the SBA. And the PPP program really doesn't depend on the bank making credit decisions. So I don't think the bank you choose, probably the more efficient bank would be the one you want to go with.
Yeah, find a bank that you think is going to get it done quickly. Are there any regulations that disallow banks mandating opening business accounts to assist with SBA loan? This is from Justine. I don't know. I do know that many banks are mandating that you open up a business account with them in order to fund the loan. And the way it's been explained by some of the bankers that I've discussed it with, it's that, it's just to facilitate the funding. It makes funding it a lot easier because they're funding it internally. But I'm not aware of any regulations disallowing banks mandating that currently. And further, several banks are mandating it currently. Latona asked, with PPP being applied through the bank, do I need to apply through the bank for the EIDL, or the online application is all I need? So the EIDL is only through that website with the SBA directly. So the bank probably won't even know what you're talking about if you brought it up. But that the EIDL is a separate product that only the SBA is handling.
Steve asks, I'm a mobile dog groomer, and it's incredibly confusing determining if he's essential or not. It varies depending on who I'm listening to, but regardless, I'm choosing to shut down per the 30-day mandate. If I'm actually deemed an essential and I choose not to work, would this affect receiving unemployment benefits? A good question. And I'm not really sure. I would reach out to the unemployment office and ask them. I think that would be the best resource for you to get the answer to that question.
Bethany asks, I agree, Kyle, and I think the reemployment office would be able to answer that for you. So Bethany asks, we spoke yesterday, which we did, that Schedule C's, basically self-employed people should wait to apply for the EIDL. So yeah, there's been some new guidance issued that April 10th is when they're going to be opening it up for the PPP loan. It's really up to you at this point. I would probably look at both options and kind of decide what makes more sense to you. So, do you have enough payroll and what they're going to consider payroll using the calculation that they're going to be using, to get you what you need, and how much of it do you think you'd be able to get forgiven? So probably my advice to you at this point would be to reach out to your bank once they open up the PPP lending for sole proprietorships and self-employed folks, and talk to your bank and get their opinion, and then make your decision. That would be my advice at this point. All right, Abby Davis, a familiar name. She says, S-Corp myself as sole employee in 2019. I paid minimum W-2 payroll wages plus distributions in 2020. I have not paid payroll distributions only. Do I qualify for PPP under self-employment or only EIDL? So since you're an S-Corp, you'd be eligible for the PPP, but it would be based on your W-2 wages that you paid yourself. The EIDL is based more on the overall business and capital requirements of the business. So, so you would qualify for either loan. Just you kind of want to look at how it would play out for each one. Okay. Okay, so Dave asks, I thought I read that it's PPP or EIDL, is that right? Kyle, can you answer that?
I haven't read anything to that effect. I do know that you can refinance an EIDL loan into a PPP loan. If you got the $10,000 grant from the EIDL loan, you're not eligible to have that forgiven under a PPP loan as well. So I haven't read anything to that effect yet. Again, we're pending additional guidance from the SBA.
Yeah, and I can say I've read some, anecdotal, editorial sort of discussions that it's one or the other, but nothing really official yet to that effect.
Sarah asks, if you've reduced but not eliminated employee hours, can the deficit be made up with a PPP loan? Sarah, yes, the answer to that question is yes. That's the whole point of the PPP loan is to bring back the hours that you've had to cut because of a downturn in business and guarantee your employees that you'll be able to continue paying them what you were paying them prior to the pandemic, at least for the following 8 weeks. And in fact, if you don't bring those hours back up to what you were paying them before, there is a chance that you're not eligible to have some of it forgiven.
Josh Lowe, Rick, I think we answered your question. Let me know if you need more clarification there. Josh Lowe asked, my LLC showed a loss for the year 2019. Does that prevent me from being eligible for the EIDL? I don't believe it does. You can reach out, you can take a look at the application. If you have any questions, just give me a call. I'll be happy to look at it with you, but I think it's more based on gross receipts and your gross costs, so your cost of goods sold, and getting the working capital that you need to cover those things, and to replace that gross income. So I don't think it's as simple as looking at your taxable income. I think you might still be able to do something there. So, but reach out to me, we'll take a look at it. Kyle, you want to take this next one?
Yes, Justine asks, what's the best option for owners that have taken mostly disbursements in lieu of payroll, especially when revenue declines and disbursements are not able to be taken? Justine, if the business owner is taking mostly distributions, then they won't qualify for as much of a PPP loan because that loan is strictly based on the amount of W-2 wages that were paid. I would probably encourage you to look at the EIDL loan to show some sort of economic loss in the business and qualify for a loan there.
Okay, Tina asks, I have a short-term rental, paid off no mortgage in the area where everything's been shut down. I own an S Corp. Do I qualify for PPP? It's a short-term rental. There's a lot of moving parts to that question. Kyle, you want to take it?
Well, we'll start with the PPP loan. Again, it's tied to payroll. So, if all you have are gross rent receipts from the rental and none of it is paid on payroll, you're not going to qualify for a PPP loan. If you own an S corporation and you are paying employees on W-2, including yourself, then you will be eligible for some sort of loan through the PPP program. If you own the rental and you have tenants concerned about making their mortgage payment, they've reached out to you about that, I highly encourage you to contact a real estate attorney and find out what your rights are and what the tenant's rights are, in times of an economic crisis.
All right. Kat asks, if you are both a business owner such as I am, but have also performed work for other entities as a W-2 employee, is it more beneficial to apply for unemployment or to apply for the SBA loan? Are they exclusive? I thought you can apply for unemployment and also apply for a PPP loan if you own a business on the side, right?
As far as I know, yes. Now, if you're a W-2 employee, it's your employer who's going to be requesting the PPP loan as long as they meet that 500 employee requirement. If your employer is larger than 500 employees and they are not eligible for the loan, then yeah, I would recommend going to the unemployment office and getting some information.
Just to clarify, it looks like she's saying she owns a business, but has worked W-2 as an employee. So, I mean, if you were laid off recently as a result of the COVID crisis here, you're probably eligible for reemployment through the reemployment office. And I haven't read anything to make me think that you wouldn't be eligible to claim, get an EIDL loan or a PPP loan if you're eligible for your business if you also own a business in addition to your W-2 jobs, right?
Yeah, absolutely.
Okay. All right. Can you get an EIDL loan for multiple companies if you own separate companies? There are some limitations to to the number of to the number of loans in general with the SBA. I just don't know the answer to that question, but I would say go check out the EIDL application because I think it does ask some questions in that vein.
Dave asks, once we get the EIDL, can we pay our employees or kids more than typical payroll? I'm not sure as it relates to the EIDL. Again, the EIDL cannot be forgiven if everything is on payroll. That's only the PPP. If you pay your kids' payroll after receiving PPP funds, it does need to be for bona fide work. You cannot put a 2-year-old on the payroll and pay them $100,000. You will run into some issues down the road there. But if your employees or if your children have been your employee in an actual official employment capacity, you are allowed to continue paying them what you've been paying them. And I haven't read anything yet that says you cannot pay an employee more than what you have paid them in the past.
And we're kind of assuming a lot of times that's going to be the case because you might have employees that were sent home or hours cut, for the last few weeks, and employers may want to make up that difference right away once they get that loan funded. So that's part of why we think that's going to be the case. But again, it's one of those things that there may be more guidance coming. Bethany asks, I'm correct in saying we can either apply for unemployment or the EIDL as self-employed, but not both, right? Again, we haven't really read any guidance specific to that. That's kind of getting pretty deep in the weeds there.
It sounds like if you're applying for unemployment and you start collecting unemployment and then you're able to get an EIDL loan or a PPL loan and start paying yourself on W-2 again, you wouldn't be eligible for unemployment from that point forward.
Yeah, that would be a question for the unemployment office, I think. Is, hey, I'm trying to get an EIDL loan to get going again, but right now I can't work, and as my dad mentioned before, self-employed people were never eligible for unemployment. This is kind of a new thing because of the disaster. So this is kind of one of those weird circumstances that come up when rules that have existed forever are being bended and broken for hopefully the better for everybody. So talk to the unemployment / Florida calls it reemployment office and see if they can maybe answer those questions for you. Evelyn's question was answered. I do see that. Someone asked, will there be any provisions for forgiveness on existing SBA loans? There are actually. We didn't really get into it very deeply, but Dad, do you have some insight on that, or Kyle?
I don't.
Based on what I've read, the SBA has told banks that they will pay the interest, principal, and fees for existing 7A loans for the next 6 months. I don't know if you have to do anything to apply for that or what you have to do to qualify for that, but that was something that I read in the bill, that the SBA will pay all existing SBA loans for the next 6 months.
And that provision was actually, one of our banker contacts relayed that information to me as well. So my advice would be, if you have an existing SBA loan, 7A loan, or 504 loan, reach out to your lender and ask them, hey, is there anything I need to do to get this forgiveness started, and when does the forgiveness start? Because you don't want to miss a payment that you're still on the hook for if forgiveness hasn't started yet. Let's see. All right, one more question from Evelyn. I'm 1099 while I wait for my build out to be completed. Can I apply for an EIDL as an individual and as a company? So yeah, as a self-employed person on 1099, you should be eligible to apply for these loans to whatever extent you're eligible, to whatever amount you're eligible for. Nate Brewer. Nate, how you doing? He says to confirm, S Corp is still eligible for PPP, even if 2019 was employee leasing and W-2 payroll began January 1 of this year. That's a good question. Payroll leasing, I have to assume would be treated the same way. You know, Kyle, have you heard anything about payroll leasing employees, companies?
I haven't. In fact, payroll leasing is not addressed at all. I would have to assume it's treated the same way as W-2 employees. Your company is paying the payroll. I would have to imagine you're eligible for the loan.
Well, generally speaking, for other type of things like retirement plans and all, and they do include payroll leasing as W-2. So I'm pretty sure they're doing the same thing, I would guess.
Yeah, and that's a question for the bank that you work with when you get that rolling. All right.
Cherry asks, her company had 4 employees. 2 of them have found other employment. Now, I'm assuming, Cherry, you're saying you had 4 employees until this week, and now 2 of them have found other employment. Can you replace them with new employees and get forgiveness? So there are, when calculating, without going into too much detail, when calculating the forgiveness portion of it, there's 2 tests that you have to meet. One is you can't have a reduction in employees, and the other is you can't have a reduction in the number of hours worked. Replacing those employees is fine when considering number of hours worked. I don't know how it will work for paying the same employee the similar amount of money. Because again, the idea is to keep the same employees paid. And if 2 of them have moved on and found jobs somewhere else, we're just not quite sure yet. Again, the SBA has another about 21, 23 days to release guidance on that. And I'm sure once we get the guidance on that, that question will be answered a little more thoroughly.
All right. And the last question is, can I share this webinar with others today? The answer is yes. As soon as it's available, we'll have it up. I know Clem with Clemco HR and Clemco AV will have it up, and we'll probably be posting it on our website and sharing it on Facebook and the groups that we're a part of. Thanks to everybody for joining. That's going to wrap it up. If you do have any questions, hey Clem, can you advance to the next slide? So Clem has set up a web page that we ask anybody who wants to stay in touch and get on our mail list. We do share updates with our clients and our friends about all of this stuff going on with COVID-19 and everything, and all the tax changes that are happening and stuff on the loan, the PPP loans and everything. So if you'd like to get on that, it's www.clemcoav.com/webinar. You know, please check it out, and I guess thanks again, everybody, for taking a part, and reach out to us directly or to Clem directly if you have questions.
Thank you.